question, Joe. I think you set me up well, because what we're going to pivot to now is a discussion of another Canadian gold story in southern British Columbia that's also a margin story, and one that, if you haven't heard, I think will be of interest, because it's also a story that I think is extremely undervalued. So I am going to be making forward-looking statements, and do encourage you to read our cautionary statement, which is available on our website. And really, I'm just going to jump into what we think this opportunity is all about. We are in the process of evaluating a high-grade gold prospect, which is situated in southern British Columbia. This is a project that benefits from both road infrastructure and power. We actually have the Coquihalla Highway, which is a 5-lane highway, which travels right through the northern end of our shovel nose projects, and that is really key in driving kind of the economics that we're going to talk about in a moment. We have been going through a big refresh in the company over the last year. We've got almost an entirely new leadership team, and that really feeds into a successful updated PEA that came out last March. This is a project that is very affordable to build, and this is an opportunity that we want to take forward ourselves. At the same time, this is very much an exploration story in the earliest innings. Importantly, this is a belt scale opportunity. While we're going to talk a lot today about our first 1 million ounces, which is defined in the Shovel Nose project, we've got equal interesting opportunities in the Prospect Valley, Skunka, and Skunka North projects, all of which are shown on this map, that are within the Spence's Bridge gold belt, which has been grossly underexplored. I would certainly argue that this area geologically represents as much potential as the Golden Triangle. The benefit we have is that we are in southern British Columbia, and we can drive here 2.5 hours from Vancouver. I'm not going to spend a lot of time on this because we have a short amount of time, but it is a new team. But this is a team that has a lot of experience in Canada and Africa, taken projects through exploration and development into mining. And we've added skills here that are really able now to take this updated PEA, take it right through feasibility and ultimately into construction. Maybe I do want to mention one thing, actually, as I go back there. In addition, the bottom name on that list is a person by the name of Fraser McCorkadale. Some of you may know him. Fraser was head of global exploration for Newcrest for 15 years and is considered one of the leading authorities on epithermal gold systems. And before Fraser retired from Newcrest, he ranked this project in his top 3 of epithermal gold systems in the world in terms of prospectivity for defining a multi-million ounce gold resource. And that's going to be important as we go through and talk about this in a little bit more detail. The company benefits from strong insider ownership. Myself, my family have been sponsoring the exploration effort in this company for a great many years. We've been investors for over a decade. In addition, we have some strong institutional and strategic funds that are involved in the company. They're listed there. The most recent additions to our shareholder roster include Eric Sprott and Rob McEwen, and Catherine McLeod-Seltzer, who recently purchased a position in our last financing as well. So they see this obviously as an undervalued opportunity, and also share our view on the exploration upside. In addition, we've got about 36% institutional ownership overall and 43% retail ownership. So this is a historical gold district. This was actually the source of the Fraser Valley Gold Rush, which was really important in the formation of British Columbia. There was many millions of ounces of placer gold that came out of this area. The source of that gold has never been found. And our effort has been in trying to understand the potential for hosting, an economic concentration of gold in any one of the 4 projects that we're exploring here. All told, we've got about 61,000 hectares, And as I've mentioned before, we have exceptional access, road access to all 4 of these projects, with a highway running through our main project and power available on site. In addition, there's many mines in the area. Teck's Highland Valley Copper Mine is just renewed its mining permit for another 20 years. So this is an area that has benefited from mining, and there is a lot of familiarity with mining and a lot of local employment attributable to mining. So it is an area where First Nations are supportive, and that has been another important advantage that we've had in working in this area for over a decade. Despite the fact we've been here over a decade and that we've got 4 projects spanning, close to 80 kilometers within the belt, our focus has been shovel nose, and it's been within a very small portion of the project area that's shown within the box that you can see there. So 90% of the drilling that we've completed to date is within this area, and it is the location of our first mining opportunity that we have identified in the updated PEA last March. So what you're looking at here is an overall footprint of our projected development plan. There's 3 main deposits that you can see, with South Zone being the largest. The bulk of the 1 million ounces in our indicated and inferred categories come from South Zone. In addition, we have ounces coming from production out of FMN and Franz. Those were the latest additions into the resource update. And while they don't contribute a lot of ounces, they contribute important ounces, because the mineralization here is actually situated near surface, which allows us to move production forward 12 months in our development plan. Everything else about our strategy is pretty vanilla. You can see the road infrastructure that already exists on the property. This will be an underground mine, no open pit mining. This is all underground. And in addition, we're using dry stacked tailings. This is a very conventional milling circuit. This is classic low sulfidation epithermal gold. So we're really looking at crushing and basically leaching. At the moment, we've contemplated a standalone mill, but as part of the trade-off studies that we will undertake as we move towards feasibility, we will look at the potential for toll milling as well. But at the moment, we are contemplating a standalone mill. We're having a look now at the updated PEA. This reflects a $2,400 gold price, so you can see that this project will generate an after-tax NPV of close to $500 million and a 43% after-tax IRR, with a very modest investment of under $200 million. This is all because of the project's location. On the one hand, being very close to roads and having access to power. In addition, these economics are driven by the ore body itself. It's high grade. We're looking at 5 grams on a diluted basis, and it has significantly, it has wide mining widths. The mining widths that we're contemplating here are between 19 and 30 meters, which makes this as a very easy, straightforward underground mining scenario. Just having a look at our all-in sustaining costs, that's also reflected. I agree that margin should be the focus for investors when they're evaluating these investment opportunities. And this project delivers a very nice all-in sustaining cost of $836. Which means that we are generating significant after-tax cash flow for almost 11 years. This project will produce between $80 and $100 million in free cash flow at a $2,400 gold price. Obviously, if you fast forward to where gold is today, we're looking at a project NPV of closer to $1 billion on this very modest 1 million ounce resource, which is getting us going. I have included this slide to compare Westhaven to a number of our peers that are slightly larger. We're looking at 56,000 ounces a year. These projects are generally trending towards 100,000 ounces. But despite the fact we're producing less gold per year, we're actually producing very attractive after-tax cash flow comparable to many of these peers. And I'll also point out that many of this peer group have market capitalizations in excess of 200 million. We're currently sitting with a market capitalization of around 50 million. Just translating and looking at that on a PNAB basis, also, again, a very attractive valuation at this stage. I'm not going to dwell on this. Everyone's talked about this today. At current gold prices, you know, this thing makes a lot of money. We're highly levered to the gold price, as all of these projects are. So next steps for us now, we're scoping out what it will cost and how much time it will take to get this project right through feasibility. Fortunately for us, 70% of the ounces are already in the indicated category, so there's not much infill drilling required. Rather, we're focused on metallurgy, geotechnical aspects, completing our environmental assessment, and collecting all of the baseline data. And all of that is underway, but we will be announcing before the end of the year what our estimated costs are to complete that work. And in addition, now I want to really pivot and talk about where we go beyond our first 1 million ounces. I think there is a strong misconception about this company that we've been exploring up here for more than a decade. If there was anything more to be found, we would have found it. I take strong exception to that. We have been very, very focused in our exploration efforts to date. And as Joe said, it's been a tough market to raise capital, so we've been really going at this with very modest budgets. That is changing, thankfully. And now we are in a situation where we're going to be able, I think, to devote more resources to actually understanding the full exploration upside. What we're dealing with here is a classic epithermal gold system. It's a series of veins along a structural corridor, and you get these pods of mineralization occurring at where you get inflections or cross structures. And in any epithermal gold system, it's really important to drill, and be prepared to drill a lot of dud holes. And that's been challenging in the market that we've had. These pods of mineralization never occur in isolation. There's always more of them. And we have a prospective corridor that not only stretches 13 kilometers on this property, we've got another 100 kilometers of prospective geology where we see the same mineralizing trends and the same exact rocks. So we're extremely excited about the regional potential. And just to highlight, you know, some comparisons of these types of mineralizing systems, Gosawong in Indonesia, Krakow in Australia, both of these started out as million-ounce opportunities and very quickly turned into multi-million-ounce opportunities, and we feel that that's exactly what we can do here, and that is a big priority and focus for us going forward. I'm not going to spend a lot of time on the geology. Suffice it to say, we've been advancing our thinking. We've collected a lot of data in a decade. We've had a lot of boots on the ground on all of our projects. We've collected a huge amount of geochemical data. We've got a lot of magnetic data now over all of the projects, and this is helping us to define kind of our priority target areas going forward. We have a well-developed geological model that we're utilizing to identify these targets on a more regional basis, and we're actively drilling right now. We are continuing to drill. This is an area where you can drill all year round, and we will be drilling until the end of November. Our all-in costs per meter in this area are very comparable to what you heard from being in an area like Yellowknife close to infrastructure. We're actually under $300 a meter, and that includes all of our assays and support costs as well. So it's a very attractive place to work, and your dollar goes a long way. Some of the things that we're chasing, just to highlight the considerable effort that's been made to date. These deposits show up well as in anomalous pathfinder minerals, including antimony, which is what we're looking at on this slide here. And that really has helped us to establish multiple targets that are currently being tested proximal to the existing deposits, with the aim to step out of that and go even further afield here next year. So, as I mentioned, the other projects also very similar rocks. It's the same belt of rocks that extend up to the Prospect Valley project, through to Skunka and Skunka North, and the mineralization that we get there is very similar. These are bonanza grades. The discovery hole at Skunka, for example, is 20 grams over 12.8 meters, and that has yet to be consistently followed up. So there's a lot of work to do in this area, and very optimistic that we will be defining a multi-million ounce belt in time. Just to sum up, we are moving this towards feasibility on the one hand. We're very focused on First Nation engagement and formalizing our relationship with our First Nations in an agreement, and we expect to be able to talk about that in 2026, hopefully earlier in the year. We're going to continue with our efforts to get this project right through feasibility. And on the second priority objective here is our regional exploration program. That is something that we intend to advance in 2026 as well. So thank you very much. Happy to take a few questions.